You are crazy if you think that the way you are going to get rich is from making the money that you have right now and just investing it in the stock market.
If I was starting over, here's how I'd start investing with just $100.
There is a lot of investing advice on the internet. Some of this investing advice is very helpful, but a big chunk of it is actually missing a lot of important details. So today I want to react to a few different viral investing related clips so that we can talk through generally what you should watch out for when you're trying to get your money advice online. Real quick, so you know where I'm coming from, I am a certified financial planner as well as an accredited financial counselor. Even without those credentials, I want all of you guys to succeed with finances, but I'm sharing this because these credentials also require me to adhere to a code of ethics. So when I'm seeing all these videos online, I do view them with a very strict lens of discernment. This video is educational and is not personalized financial advice. Why is that? Because I can't give you personalized financial advice without knowing your exact personal situation. Let's start with the first clip.
If I was starting over, here's how I'd start investing with just $100. First thing you need is a brokerage account. Think of it like your bank, but for investing. Options like Fidelity, Vanguard, even Schwab, Robinhood let you start for just $1. Now, instead of trying to gamble on one single stock, I'd put my money in an ETF or an index fund. This way it's easy, diversified. Something like an S&P 500 is going to let me own hundreds of companies at once. Now, the $100 is just the beginning. The real wealth building comes from consistency, right? Repeating that process again and again. So I would set up for even $20, $50 a month to auto transfer to my investment brokerage account. A lot of people think that you need thousands to start investing, but you just don't. Oftentimes, that's why people start to build the habit way too late. Open the account, get the $100 in, and build the habit. Habit and just starting is what's really going to build the wealth, not necessarily the amount. Especially if you're on the younger end, you have time. This is a long-term play. Reminds me, don't think that you're going to invest this $100 and get rich overnight, right? This is about consistency. This is about playing the long-term game, but your future self will thank you.
All right, I liked that clip. I think she did a really good job in just over a minute to break down investing for beginners in a lot of plain language. For this video, I'm going to use what's called the sandwich method. I learned that in my Toastmasters club. Basically, when we give feedback, we start with some positive, and then the meat of it is constructive feedback. And the end, the other part of the bun or the other side of the sandwich, is more on the positive. So things I liked about this video, it's motivational, telling people that they can invest with $100. She touches on some key concepts that are important for beginners, like the analogy of a brokerage account being like a bank account, but for investing. Some haters might get technical and say that that's not accurate, they're not similar, they're not the same. And no, they're not. They're not the same type of account. But as she's explaining this to a beginner who doesn't know what a brokerage account is, I think it's fine to have analogies like that that are conceptual. She also touches on ETFs, exchange traded funds, and index funds, and briefly alludes to them in terms of diversification. So in case you're new to investing and you didn't catch that, essentially when you're buying a stock is a type of security, it's a type of investment. A stock represents a share from one company. If you use all your money to buy stocks from just one company, it's considered to be high risk because of the concept of putting your eggs all in one basket. When people talk about buying funds, on the other hand, a fund as it relates to investing is a way to buy many different stocks of many different companies all at the same time. Let me go to the meat of the sandwich now. A small nuance that a lot of these videos don't mention when they're alluding to funds is that not all funds offer the same amount of diversification. Oftentimes when you see videos online, people are like, invest in index funds, invest in the S&P 500. Those are very common funds that hold many strong companies because the S&P 500 contains the 500 biggest companies in the United States. But not all index funds are S&P 500 funds, and not all funds in general track the biggest companies. There are some funds that have all stocks in the same industry or sector. Some funds hold only stocks and companies that are outside of the US. Even if you agree with the strategy that people talk about in their TikToks, the thing I will keep reminding you guys is you always still have to match the investment with your goals. Someone might invest in very safe stocks or funds, knowing that they're going to need that money in a few years. They don't want it to go up and down too much because they need it sooner than later. Maybe they're only a few years away from retirement. Whereas another person might invest in a certain stock or fund or other investment that is more volatile, but they know that because they plan to invest in it for decades, they're okay with that volatility and they believe strongly that it's going to grow their portfolio a lot more. Now, to wrap up this sandwich on this video, because we should get on to the next clip, the last part of my feedback on this video, what I really like about it is how much she emphasizes consistency. That investing your first 100 is cool, but the real power of building wealth is the consistency. If you put $100 in and invest it in something and you're stressed out the next day because it's dropped by $1, then you're focused on the wrong thing. Investing is a long-term game, so it's the consistency of investing $100 or more over and over again that's really going to help you build wealth and diversify your assets. All right, the next set of clips. These are 2 short clips from the same TikTok trend, so let's check those out real quick. So real quick, on this trend, the trend, these are these 10-second videos. They're saying, pay attention, a Roth IRA is a smart thing, don't ignore it. And even one of the clips, the guy alludes to maxing it out. So the gist is, get a Roth IRA, max it out. This is very important, especially the younger you are. For those who don't know what a Roth IRA is, it is a type of retirement account available here in the United States. IRA stands for Individual Retirement Account, and Roth is the name of the guy who was very instrumental in getting the legislation passed so that a Roth IRA could become a thing. If you've heard of IRAs before, you've probably heard of a traditional IRA versus a Roth IRA. There are many differences between the two. A very distinct one is the difference between a traditional IRA being pre-tax and a Roth IRA being post-tax. When you pay income taxes is either now or later. A Roth IRA, you are paying income taxes in the current year that you're contributing to it. As the Roth IRA grows over time, once you hit retirement age and you're past 59 and a half, you'll be able to withdraw money without having to pay any additional taxes. My issue when I see videos about Roth IRAs is how much detail they're missing. If you watched my last Reacts video, I think I mentioned this same fact in that video. Here's an example. When I was in my late 20s, I was making multiple 6 figures. And it was around the same time I started watching finance videos online. I heard something about a Roth IRA and all the advantages that it had, and I got interested. And I'm so glad I didn't just go ahead and open one and put money into it, because come to find out, I was above the income threshold. For Roth IRAs specifically, there is a phase out limit. So basically, if you make between this amount and this amount, you're within the phase out range. If you're below the phase out range completely, you can max out a Roth IRA as long as you have earned income. If you're above the threshold, the complete phase out limit, you can't contribute to a Roth IRA. Actually, I take that back. You can open a Roth IRA and put money in it, but you will get in trouble from the IRS. You'll end up having to pay fees and penalties for having had money in that account when you were above the threshold. And on top of that, you have to move the money out. So you lose all benefit of the Roth IRA anyway. And then if you're in the phase out limit, it basically means you can contribute to a Roth IRA if you have earned income, but the amounts will vary of how much you can actually put into it. So in relation to these trendy videos, like, I get the gist. You're basically saying, hey, the younger you are, this could be a powerful account, so pay attention, learn more, get curious. My issue with these short trendy videos is if a 20-something-year-old came across it and it has so many likes and so many shares, they're going to be like, wait, this person must be onto something. A Roth IRA is probably legit. Let me go open one and put money into it. And for most younger people, maybe they're within the limits and it's not going to be a problem. But you do not want to make that mistake. Taking a step back, the big takeaway here is I want you to turn what is usually a 2-step process into a 3-step process. Oftentimes when people are learning about investing online, they learn about it, like they watch a TikTok video, Instagram, YouTube video, and then step 2, they take action. They go ahead and invest in that thing. What I want you to do when it comes to investing across the board is add another step. If you see a video about investing that's interesting to you, they talk about Roth IRAs, they talk about HSAs, they talk about whatever it is. Instead of going directly to investing in that, add in step number 2, which is more research. Educate yourself further, learn more about it, find out if it fits your scenario before you go on to step 3 and invest. It's as simple as that. Okay, so that's how I feel about these short trendy clips. I did end up digging a little deeper and found that the second clip, the one of the woman, she posted a video not too long after that first one went viral, and it was a talking video where she actually digs into some of the nuance of IRAs and Roth IRAs like I just mentioned. So let me play that clip next.
Here's everything you need to know about investing in an IRA and how to do it in less than 2 minutes. First things first, you need to make sure you're eligible. This means you're age 18, you're earning income, and you're paying taxes. The second caveat with eligibility is for high income earners. There is an income limit on contributing to a Roth IRA. So if you're a high income earner, make sure that you check those limits set by the IRS. If you exceed them, you'll need to do the backdoor route, but that's a story for another time. So if you're eligible, the first thing you're going to decide is what brokerage company am I going to open my account with. This is like deciding what bank am I going to go open a savings account with. Brokerages are financial institutions that offer investing products. A couple of my favorite, Vanguard or Fidelity, because they have very low fees and are very user friendly. After you've decided the brokerage company, you Google open IRA at Fidelity or at Vanguard, and you're going to be posed with the question, do you want a Roth IRA or a traditional IRA? Roth and traditional are just describing when you're going to pay taxes, now or later. Roth, pay taxes now, get all of your money tax-free in the future. Traditional, the opposite. Don't pay taxes now, pay taxes in the future. I tend to invest in Roth because I think that tax-free growth is so powerful. So now I've decided I'm opening an IRA at Fidelity and it's going to be a Roth IRA. Once I get the account open, I link it up to my bank account and I start depositing money. Maybe that's $100 every paycheck or $100 every month. And I'm gonna automate that so that I'm always paying myself first and I'm always prioritizing investing. You can get started with as little as $10. So don't get it twisted. You do not need to have hundreds of dollars to get started investing. Now, this is the most important step. After you contribute your money, you need to make sure it's actually invested. You can contribute and deposit into an IRA and it cannot be invested. So don't stop here. The last step you need to do is to make a trade, and that's buying a stock or a bond. I choose to invest in index funds, which are highly diversified, low cost, and well-performing assets over the long term. This might be an index fund like the S&P 500 index fund. That is a basket of the 500 biggest companies in the US. A total stock market index fund is a basket of every stock inside the US, and you can buy that in one transaction. So if you want to buy the S&P 500, you'd Google Vanguard S&P 500 index fund, and you're going to find the ticker, which is the shorthand name for that fund. And inside your Vanguard Roth IRA, you are going to make a trade. You're going to say, use my $100 that I've deposited, buy Vanguard S&P 500, and you'll know the shorthand ticker based off that Google search. At that point in time, your money is now invested. It is ready to grow. Continue to buy and hold index funds on repeat over the long term, and you will see success.
I thought it was funny that she's like, I'm gonna explain this in 2 minutes. And then she puts up 4 fingers. So honestly, I think this is one of the better short form explainers that I've seen about Roth IRAs. She touched on some of the things I've mentioned right before I played this video about the income threshold, that some people are eligible to contribute and some aren't. She even mentions a very important tip, which is something that some people do with various types of investment accounts, including Roth IRAs, is transferring money into the account, but then failing to actually purchase investments. Now, if I really wanted to get nitpicky, she alluded to investing in the S&P 500. I mentioned that a little bit earlier with the first clip that we looked at. I don't see anything wrong with teaching people to invest in the S&P 500. It's known as a strong investment, but before you go on and do the same exact thing, you have to learn enough to make sure that it fits your goals. So that's just something you want to keep in mind. It's often why people hire financial advisors or financial planners. But if you're just starting, doing it DIY is one way to do it. Just make sure that whatever information you see online, you're doing a little added research. All right, next clip.
My hairdresser is a gorgeous 21-year-old who is making moves for herself. And as she did my hair yesterday, she said to me, Pat, what should I be investing in? And I love that she said that to me. Like, she didn't want to talk gossip. She didn't want to talk hair. She was like, I want to talk business. And I said, girl, this is my area. So as a 20-year-old, these are the top 5 things that I think you should be thinking about investing in. This is if you've got a little bit of money in the bank and you don't have any debt and you're like, how do I make my money grow for me? So you've heard it before, a high interest saving account. Fundamentally, there's a concept called inflation. If your money is sitting in your bank, your money is going down. If you can get an interest account that is paying more than the current inflation rate, then you are going to be making money on your money. Next up, you probably need an ISA. You can put up to £20,000 in there per year, tax-free. And I know tax sounds like a complicated subject. It kind of is, but honestly, the tax man is yamming our money every single day. So at least if you can have that 20,000 and grow that 20,000, you should be doing that. And speaking of growing, this is where you now start to look at investing. Most people think about investing in the stock market, but I really believe in having a piece of the entire market. And this is via an index fund or ETFs. To do this, you will need a brokerage account. You need a brokerage account. You put some money in your brokerage account. You find the ticker. If you need me to explain this stuff, let me know. And then you purchase that ticker. And then now that is within your stocks and shares, your brokerage account. After you've got some stocks within an index fund, maybe you want to start looking at a pension. And I know when you're 20, you don't want to think about a pension, but it is a tax vehicle. If you want me to explain that, let me know. But I'm going to be real, I don't like putting money into my pension. Finally, I would say the most important thing you can do in your 20s when it comes to investing is actually investing in yourself. It's what you know, it's who you know, it's your experiences. And I think you need to get a fundamental grip of what is your expectation when it comes to investing. I think people think that they're going to become a trader and make profits off the back of it. Or is it about long-term security? These are some key questions you need to ask yourself first before you think about investing. But if you want me to talk about this more, I'm ready. Leave those questions there and I will answer them one by one.
Patricia Bright. I really love her as a creator. So my feedback on this one is really just to make a point. Aside from her British accent, so we know that she's from the UK, she mentioned an ISA account and a pension, which are two things that won't apply to you if you are in the United States, for the most part. So ISAs are a UK account, and a pension is something that exists here in the US, but over the decades has become less prevalent as a retirement option for most workers. I don't want to spend too long on this clip because I like her vibe and I like the tips that she's giving. The only thing I'll point out is this is a reminder for all of us that we have to make sure we know where we're getting our information. I sometimes will remember to let you guys know that I'm talking about a US specific account, 401ks, 403bs, etc. But sometimes I know I forget. Just do your due diligence and make sure that it also applies to you. Let's play the next clip.
These are the 3 ETFs I've had since I was 20 that are going to make me a millionaire before I'm 30. And if you want more smart money and career moves, give me a follow. Number 1 is VLXVX. This is what I have in my 401k and it's a 2065 target date fund. So technically it's a mutual fund, not an ETF, but they're basically the same thing. This is a retirement fund based on your age. So it starts off with more high growth investments like stocks. And as you get older, it automatically rebalances into safer investments like bonds. I like this one because it has both US and international stocks as well as some bond exposure. exposure. I know some people in their 20s don't have bonds at all, but I prefer to be as diversified as possible to add stability and reduce risk. Number 2 is VTI. This is the total US stock market ETF, and it's what I personally invest in the most. So I actually have some of this in almost every single one of my accounts, like my IRA, HSA, and my brokerage account. This has every single company on the US stock market, so I don't have to try to pick which ones are going to be the best. I can just own all of them. And number 3 is VXUS. This is the international stock ETF, so I can have exposure to companies outside the US as well. I keep a lower percentage of this, but I still like having some, so again, I can stay diversified. And the cool thing about investing is that you don't need thousands of dollars to start. I started when I was a college student, and if you're a college student or in your early 20s, you can still invest with whatever you have room for in your budget and slowly increase the amount as you get older and you start earning more.
Okay, as much as I hate being a hater, let me say the one thing that I did not like the most about this video is she said she's had 3 ETFs since she was 20, and the on-screen visual hook is that she has 100K at 22. So that implies that in a 2-year span, she somehow came up with 100K. She didn't say that straight out, but that's the information we have. And what I don't like about that is, first and foremost, we don't know how much she's contributing. Did she invest 5,000 in 2 years and that turned into 100K? Or did she invest 90K and it turned into 100K? I think that's a little misleading because I know the power of a hook. I'm a content creator. Even though her hook is strong, it implies that the next ETFs that she's about to tell you could probably help you make 100K in 2 years. You have to think of the psychology of a viewer who sees this. You want to know, what are these 3 things she's invested in? And she gives exact ticker symbols. Do I think there's anything wrong with these 3 ticker symbols? A target date fund, the total US stock market, and international stocks? No, I think I'm invested in all of those things. I don't think there's anything wrong with the exact investments. It's the assumption that those got her to 100K in 2 years. So my goal here is to help you build your discernment. You see that, you gotta wonder, like, how much is she actually investing? And when were those 2 years? The stock market looks different during different economic periods. So yeah, not to pick on her too much, but those are the things you wanna look out for. You have to add that middle step of doing your own research. Let's wrap it up with one more clip.
You are crazy if you think that the way you are going to get rich is from making the money that you have right now and just investing it in the stock market. That's insane. Why? Because what you are actually doing is you're just letting other people get rich. Who gets really rich? The asset managers who manage your money, the banks that hold your capital. Why do they get rich instead of you? Because what do? They take your money and they do something with it proactively. So they take your money and they take real risk with it. And I think unless you take risk with your money, but also with yourself, you're never going to get wealthy. And so you and I could go very viral on the internet every single day if we talked about how to invest your first $10,000 to get to $100,000.
Yeah.
You could get a lot of views on that, except it's totally pointless. And if what we really want to do is elevate people to real wealth, where they have enough money for all the things that they want in life, it's not done through investing. It is done through earning. That is the only way you make real money. Once you make real money, you can make more of it through investing. But in the beginning, you got to earn. That's it.
She lost me for a second. Okay, I don't like the opening to begin with. I don't like calling people crazy. That's a lie. I've called people crazy. It just depends. But the gist at the beginning, you are crazy if you think that the way you're going to get rich is by investing in the stock market. That is how a lot of people get rich, realistically. And I'd be surprised if she's not invested in the stock market. I follow Cody Sanchez on a couple of platforms. I don't follow her super closely, but I keep tabs. I've always been able to learn bits and pieces from her. I know that she invests a lot in what she calls boring businesses. So businesses like laundromats or like local businesses. But I'm just confused. At the beginning, she said, you're crazy if you think you'll build wealth by investing in the stock market. And then at the end, it's like, once you earn money, then you can invest. Maybe I've been recording too long, but it doesn't seem to match up. I will give her credit though. Something she said resonates with me and with the message that I like to tell people, especially women. And that is, if you want to build wealth, you have to be willing to take some risk. Some people like to invest in the total stock market or only the top companies in the US. I think that strategy works for some people. I think there are ways to build wealth beyond that. That's not me telling you to put all your money in cryptocurrency or private equity. What I want you to do is to get curious and learn more about different types of investments, and think of it like you're leveling up. Maybe you start with investing in the stock market, and once you have enough of a cushion there, you can go to riskier things. All right, I should have tabled this for like the next Reacts video because this is a long video. That's all I got for today. I hope you learned something from this video, and if you want me to make more like this, let me know in the comments. I'm always happy to hear your feedback. And until next time, that was my knee cracking. Until next time, peace out.